All right. So it hit 10 o'clock, so we are going to get started. I have had several questions sent in via email since some folks said they weren't going to be able to attend during this time slot. Anyone who is attending, if you have any questions, feel free to pop them in the Q&A panel down below. I'll get started with, like I said, a couple of the questions that were already sent in to give time for folks to enter some questions into the Q&A down below. All right, so the first question we got asked was, how does things change if, say, you're working for a group practice and you are receiving a 1099 versus getting directly paid from, say, Simple Practice or clients directly, right? How does that change your record keeping? And the answer to that is it really doesn't. Each month you should be recording the income that you are receiving from the group practice. If you're a 1099 as income on your spreadsheet, at the end of the year, you will receive that 1099, which will show the total amount that you were paid. Now, your income should either tie to that amount or be a little bit higher if, say, you're working for a group practice, but you also have private clients yourself. It would be the higher number that you would use. Now, there is the potential that your total income over the 12 months is a little bit less than your 1099 income. And usually that comes into play because, say, the group practice was taking out any fees. Say you were paying monthly rent and they took it directly out of your income that you were being paid instead of you paying them. You would need to gross up your income that you were recording, same with then recording those additional fees. So if they were bank fees, if they were rent expense, you would want to then gross up that amount on your income and expense sheet to make sure that you tied back to the 1099. 1099s are important because what the IRS does is when you file your tax return, they check to see if your income matches that 1099 or if it's higher than it, right? They don't care if it's higher than it, but you need to be reporting at least that much income on your tax return. Every now and then someone comes back and they're like, hey, this 1099 is incorrect. I didn't actually receive this. I should have received X, Y, and Z. I didn't because of these reasons. Normally, we're like, okay, you need to go talk to the person who issued you the 1099 to get a corrected 1099. But that is a common scenario where we see where it might be a little bit less just because of additional fees that were being charged to you from the group practice. Rent is a common one, administration fees, maybe they're doing your billing for you and so they take billing out automatically. And so with 1099s, you just want to make sure that that is good to go there. The second question that I had emailed into me was asking about estimated tax payments. So their question was, do I need to make estimated tax payments if I haven't made, their question was very specific, but if they haven't made a ton of income. So if you've made less than $5,000 of income over the whole course of the year, we don't really, the expectation of making estimated tax payments aren't there. So we have some folks who have maybe they're seeing clients on the side just a little bit. And so they just have a small amount of income coming back and forth. But say you started your group, you started your private practice this year. So far this quarter, you've made $2,000. This quarter would be April and May because you have an estimated tax payment due 6/15. If you made $2,000, I wouldn't recommend making an estimated tax payment just yet. Now, say June goes by and you make $8,000 in June, another $8,000 in July because your practice is filled up, you're seeing private practice clients, right? At that point, yes, you should be setting aside 25 to 30% of your income, whatever the calculation on your spreadsheet tells you to, because it varies depending on how much money you're making. But at that point, you should be making estimates. But in the beginning, I know those first couple of months, it can be rough depending on how quickly you onboard clients. And so you don't want to be like, Toni, I made $1,000. Do I need to make an estimate? No, don't worry about it. Wait until next quarter when your income's a little bit higher. The third question, very similar. It was in the same email. At what point should I start saving for retirement? Now, I'm a retirement nagger. I warn everyone about that. I believe you should always be saving for retirement, but that first year, it's rough, right? Those first couple of months of setting up your private practice, onboarding new clients, there's not a lot of free cash flow, right? You're like, Toni, between setting aside for taxes, paying the expenses for my private practice and then making enough money to live off of, I don't have a lot of extra. That first year, I know it can be like, nope, I don't want to do this. And that's okay. The big thing is don't let that continue, right? So a lot of folks get into the loop. They don't save the first year. They don't think about it the second year. The third year, it's completely gone from their radar. And now we're 5 years in, they're on the phone with me. And I'm like, so what type of retirement account have you set up for your practice? How are you saving for future you? And they're like, I've completely spaced on it. I haven't set anything aside. And at that point, we then need to catch up, right? It's like, okay, now you need to make this a priority. You need to make sure that you are setting aside enough money to help take care of future you, right? Because eventually you're not going to want to be seeing clients when you do decide to retire, and you're going to want to have that money set aside for you. I do have a couple other questions that folks had sent in. I did notice some folks have joined us as attendees. So if you do have any questions, pop those into the question and answer panel, and I will be answering any questions you guys do ask live. So I have some more that I can keep going on, but I want to make sure I give any attendees the priority in case they do have any questions. The next question on my list is about at what point should I be talking to an accountant, right? Accountants can be a little pricey. I know that. I am one. I get it. I really believe that if you're at the point where you're making a decent amount of money each year, you should at least be talking to an accountant about your taxes. Now, you might be able to get away with doing it in TurboTax. You might be completely comfortable with that. Cool, more power to you. But especially the first year, there are some things you could be missing that you're not taking advantage of, which is one of the reasons why I'm like, you should probably schedule a call, talk to an accountant, maybe schedule a call with us. I know we currently do have a wait list, so it can be kind of hard to talk to us. We try to give priority to folks who've taken our webinars and classes on our wait list, just because you have the basics at that point. But that first year, making sure that everything is correct with your taxes is important. The next big item, which I'm like, at this point, you should also talk to accountant, is if you get to the point where, say, you're making $80,000 a year, $100,000 a year in gross income. You want to just make sure you touch base with an accountant that you're not missing any changes in the tax law or areas that you could be saving, right? I have a lot of folks who hit that point, and that's when we discover they haven't been saving for retirement. And I'm like, oh, we definitely want to take advantage of this because saving for retirement is a tax deduction. So it helps current you because you pay less in taxes, and then it helps future you because you're setting money aside for retirement. So about $80,000 to $100,000, make sure you're talking to someone. Before then, you can get away with not if you're feeling comfortable doing your taxes. The question that goes hand in hand with that is next about bookkeeping. At what point should I outsource my bookkeeping? I have a lot of folks who never outsource their bookkeeping, right? I'm a firm believer that in mental health services, your guys' income can be limited at times, especially if you are accepting insurance, and keeping money in your pocket is very, very important, right? You don't want to, you need to be making what you need to make so you're making a living wage, right? One of the levers with how you do that is keeping your expenses low. And that would mean taking care of your own bookkeeping, right? Either the spreadsheet that I sent to y'all, that's part of the course. A lot of people love it. They use it forever. They're like, nope, I got this. It isn't complicated. I can enter in my income and expenses each month. You don't need bookkeeping at that point. Some folks are like, I can't stand the manual entry. I moved over to QuickBooks. Should I end up outsourcing that? And I'm like, not really. It's just you. You're not growing into a group practice. This is your growth plan. You should keep that money in your pocket. Right. And I try to be very blunt about that. I'm honest to a fault. Now, do I have some folks who come to me who are like, Toni, I need to spend, 3 additional hours a week working with clients. I can't also do that and take care of my finances and take care of this. I want to outsource that. Okay, I'll have the conversation with you. We can discuss how much it would cost and what are some ways that we can structure that so it isn't too expensive for you. The other big one we see is group practices. I'm going to hire someone, Toni. I would like to outsource this bookkeeping since now I have to add in supervision of an employee. Totally makes sense at that point. right? Because now you have additional income coming into your practice, and outsourcing bookkeeping makes sense, right? It's all a give and take about what your income looks like and what your expenses look like. So that is one of the things to keep in mind. I have one more question that was sent in via email, and I don't see anything put into the chat yet from our live attendees. So if you do have any questions, because a couple more folks came in live, feel free to pop them into the Q&A panel. Because my last question is a little bit of a doozy. And I've posted a lot of information on it, and we're going to be doing a separate webinar on it in August, and that's S corporations. We get asked a lot about S corporations. At what point should I become an S corporation? My advice has been for a very long time, once you hit $80,000, which is one of the reasons at that point you should talk to an accountant, we should look over and see if becoming an S corporation makes sense. Because it really is dependent on what city you live in. Are you taking insurance? Are you not taking insurance? Are you working full time? Are you working part time? Are you doing testing? Are you not? Right? There's a lot of factors that go into it. Up until this point, it's been $80,000. We should have that conversation. This year, because of the increase in inflation, which I know all of you are feeling it if you go to the grocery store, and the fact that a lot of insurance companies aren't increasing their reimbursement rates, but all of our expenses are going up, have increased that threshold to $100,000. Just because of some of the things that go into becoming an S corporation, the costs for that have increased enough that you need to be making more money so that it's tax efficient for you. Now, I'm not going to go into the nitty gritty of why. I will be doing that in our August webinar, and I'll be sending out the dates for all of those on our newsletter. So they will be coming out. But I have moved that threshold and that advice threshold for becoming an S corporation to $100,000 in gross income starting this year. And like I said, it's because of inflation, right? Inflation's one of those things that we're all dealing with right now. Hopefully it doesn't last long term, but we are seeing the ramifications, especially with private practices who are taking insurance. We've had a lot of questions recently about, Toni, how do I get off insurance panels? Because I'm only getting $90 per session, and that's not sustainable, right? We are covering that whole topic in its own webinar because, like I said, we've received, I think, 5 or 6 questions just this week from current clients about that in July. I'll touch base on it a little bit now, but I would definitely be talking to any insurance panels that you're currently on to see if there's wiggle room and negotiation to see if you could increase your rates given the influx in insurance right now, right? If you're only getting $90 a session, it can be really hard for $90 a session to be sustainable. 110 is a lot more doable. I've heard that as folks have negotiated or given pushback to insurance reimbursement, their rates have gone up. So if you take insurance, talk to your insurance companies and your panels. I know no one wants to talk to them, right? But I have seen folks who've given pushback and been like, hey, I can't stay on this panel if this is what the reimbursement rate is, it going up by $10 or $20 a session, right? And that's a phone call. Maybe it's 2 phone calls, because you're not the only one making those phone calls right now, right? And so giving that push and being like, hey, I need to make more money here, you know, all my expenses are going up, is one of those areas that you can increase your fee. Along with that, if you haven't done an increase in your private pay clients in the last year, I would make sure you do one sooner rather than later, right? We've had some folks who it's come to our attention, they haven't done a price increase in 3, 4, 5 years. So you want to make sure that each year you are taking a look at what your private session fee cost is and doing an applicable increase each year to your clients, right? I had someone who their private pay session fee was $90, and it's been that way for 3 years. I'm like, hey, you need to do a price increase at this point. And if you're not willing to do a price increase with the clients you currently have, anyone new who you onboard should be at your higher rate, right? Just to give you a little bit more breathing room, because you don't want to be at the point where, because of inflation, your income has been stagnant, but all of your expenses for your private practice have increased, and your personal expenses, right? Your rent on your apartment, or your mortgage on your house, or your utilities and grocery bills have definitely gone up, right? And so you want to just keep in line with it as that's happening this summer, because I don't see inflation decreasing within the next 3 to 6 months. I've been on a couple different economics webinars where I'm like, okay, do they think this is going to change? And they haven't. It doesn't look like it. I hope it does. I really, really hope it does, but it doesn't sound like it's going to. So that would be one of the things to keep in mind. So we did have a question: when putting money away for retirement, do you do so prior to taking out for taxes, or do we set aside from the remaining amount after taxes? So how I look at it, when income comes into your practice, the first thing you do is set aside taxes. Number one, taxes get taken out, because that is not your money, right? The IRS and the states, they want their money, and they will do a lot to get their money. And so say you get $100 in, you would set aside the $25 for taxes. Then you would look at the $75, and from that $75, you would set aside money for retirement. Now, there are a couple different rules of thumb for how much you want to set aside, but there are a couple different ways to do it. My general rule of thumb is, over your course of your first 2 years in practice, to try and get up to about a 10% goal. So setting aside 10% of your income for retirement. Now, some folks are like, that can be a little much, depending on how much they're getting paid. And so first year, $1,000, set aside $1,000, right? That's a good goal. And maybe you double it the next year. But that laddering up is definitely important, but I would do it after taxes for sure. Just checking to see if I have any other questions pop up in the Q&A. Right. Lastly, I did just want to mention, I do have our summer webinar series. I mentioned a couple of them. In July, we're going to be talking about fees, inflation, pushing back on insurance, all of that. So that's our July webinar. Our August webinar is going to be S corporations, everything to do with them, when you should become one, when you shouldn't become one, what's involved with becoming one, and what the current prices look like to be one. Because unfortunately, becoming an S corporation is not free, and you need to factor in things like payroll costs, software costs, and tax return preparation costs, because that is definitely a tax return you cannot do yourselves. And then September, we are talking about taking time off. So we're talking about vacation funds, planning for vacation, making sure that you can pay yourself through your vacations, and how to calculate those numbers, even if you want to take 5 weeks off a year, because we have some folks who their goals are to take 5 weeks off a year, not all at once. That was the first thing I asked her is, are you taking these 5 weeks off all at once? Because I don't know how that'll work with your clients, but she does divide them up. But her goal is to take 5 weeks off a year. And so we've set up how much she needs to set aside each month. And that'll be what our September webinar is about, how to set that up for 2023 to make sure that you can take the vacation you want to take in 2023 financially. I'm not touching the COVID side, all of that. It's all the making sure you have enough money set aside to do that in a sustainable way. So if we don't have any other questions from the live audience, those were the questions that were sent in to me, so we can get this wrapped up here pretty quick. I am recording this, so we will be sending out the recording for the Q&A to everyone who is signed up for the course. So it will go out to everyone, even if they aren't here live. So you can refer back to it. And I think we've already sent out the ones that we did last quarter as well. I know some different questions were asked in that one. And so I want to make sure that everyone has access to that information. As always, in the course itself, you can also submit questions. So if you're like, oh shit, I just thought of something, Toni, you can either submit it through Thinkific or just shoot us an email and we'll get back to you on that. We try to be pretty flexible with answering any questions that come up. So Well, if that's all, then I'm going to let folks go and I'm going to start editing this video. I hope everyone has a fantastic day, and I will talk to all of you soon. All right. Bye.